Howdy, everyone. Welcome to Tilson Live. It is 2 o'clock. It is Tuesday. We are live on Facebook, live on YouTube. I'm Eric Allard, part of the fourth generation of the Tilson family, and I'm joined, as I am each and every week, by our Vice President of Marketing and Customer Experience, Dawn Dantzler. Hello, Dawn.
Hey, Eric. How's it going?
It is going great. It's going great. We've got our first spring. First spring is here, which means the pollinating has begun. We have some pollinating happening, but don't worry, we will have another cold front coming through towards the end of this week, as we always do, so we can have second spring later. But there are bluebonnets.
Nice.
Bluebonnets are coming out. But we are here. It is Tuesday. It's 2 o'clock. It's Tilson Live. Guys, your questions and comments we want to know where you're building, where you're watching from, what part of the process that you're in. Are you just starting this process? Are you thinking about building a home on your land? Have you already gone through the process and you're closed and you're sitting in your recliner watching us do these videos? Or are you somewhere in the middle? Have you started the process? Maybe you've gone contract, maybe you've done your colors, maybe you're under construction. Maybe you're looking at different builders. Maybe you have questions about financing. If so, Dawn has great news for you. Because why, Dawn?
You've come to the right place. That is actually what we're going to talk about this week is financing and Tilson's EasyBuy program and how it is different from what you're going to see with other builders.
Yeah, so a lot has happened in the last, let's call it 7 months with financing and mortgages in the great United States of America and in the world for that matter. But for sure, again, drop your comments. We are live on Facebook. We are live on YouTube. Drop your comments into the chat. Tell us where you're watching from, where you're building, what part of the process that you are in. And obviously, we want to hear all of your questions. So, yes, we are to answer questions and go through a very short presentation on financing because mathematics. But then also, we can answer any questions you have about building a home on your land. Obviously, we specialize in rural areas, so nobody has built more homes in rural Texas than we have. So if you have questions about culverts, about site preparation, about wells, about septics, about financing, about design changes, permitting, any of those kind of things, about construction, we are here to answer each and every one of those. That's why we do this show. It is for you guys, not for us. Dawn already knows this stuff. She does not want to see how we can hear me preach about it. So this is for y'all. So Dawn, what has happened in the last that has got people all riled up about interest rates, and how does it really relate to what we're doing?
Something's happened. So interest rates have gone up, guys. We saw historically low interest rates during, in the past couple of years, and now they're returning back to what would be, although I hesitate to use the word normal, they're really kind of coming back to normal and what a balanced market should look like. So the good news is, everything's kind of leveling out. We shouldn't feel as threatened with the economy, but it does mean that you are looking at a higher interest rate, which honestly makes our program a little bit more appealing to everyone, which we want to kind of talk to you guys about. But yeah, there's been some chaos with interest rates.
Yeah, in fact, if you go back and look at the entire 50-year history of the 30-year mortgage, so go back to the early 1970s or about 1971, it's still below normal. So even at 6.5%, 7%, that is below what it has been historically over that 50-year time period. What's been the real recent feel for people is that is definitely higher than it was the last probably 5 years.
Right.
But when I first got into this business in the late 90s, early 2000s, rates were about 8.25% for what we called A paper. So somebody with great credit scores, with 20% equity position, we're talking 750s credit scores or higher. Those folks were very happy and very fortunate to get 8.25% interest rate. And that's just the way it was. And of course, when the rates dropped, they refinanced, which probably will happen again. So, But anyway, we do have a presentation, but Dawn, the format is a little different. Again, drop into the chat where you're watching from, where you're building, what part of the process that you're in. So any questions you have pertaining to not only financing, but obviously we'll talk about financing. We will do specific problems if you want us to, about your equity position, about down payment, how all that works. Because if you owe money on the land, but you're still paying on it, how does that work? We're here to answer all those questions. But Dawn, there's a little bit different rules this time. What are the rules?
Yes. So usually we pause throughout the presentation to take y'all's questions and comments and to see what's going on. But with this one, there is a lot of math. It is very much a sequential presentation. So we're going to run all the way through the presentation before we take questions. The reason for that, a lot of your questions will probably be answered later in it as we go through our math example. The main though is that Eric, if y'all haven't noticed, we have a tendency to get distracted by any little squirrel that runs by, and since it's math, we'd have to start all over, and nobody wants that. So we're just going to go all the way through and present it, and then we will answer your questions. We will go ahead and pause for greetings first, though, so that everybody, because I know you guys are coming in, so we want to say hi to everybody who's here, so we know who we're talking to. So I'm going to bring up, we've got Tish, who is joining us, Magnolia, just starting the process of thinking about building. So you are in the right place, because this is one of the most important factors when you're building. We've got Josie, who is in Angleton.
Awesome.
We've got Leslie building a San Gabriel in Wilson County, scheduled for release and construction May 1st, hoping we get bumped up. Super exciting. That is exciting. We have Chris, who has his framing started this morning on our Possum Palace at the hills above PK. Awesome.
Oh, beautiful. That's cool.
That's exciting. We've got Sonia, who owns 5 acres, looking to build with Tilson or UBH in Crosby, Texas. Okay, well, you've come to the right place.
We're glad you're here, Sonia, and we hope to clear the air for you a little bit. So let's do that.
Absolutely. Our YouTube friend from Angleton owns land worth $16,000. If I want to build a $300,000 home, how much will my down payment be? We will get to that.
We need one question, Josue, while you're doing that, drop in the comments. I need one more variable answered for me, and I can answer your question. Tell me what you think your land is worth. If you tell me what you think your land is worth, I can give you that answer. So tell me about what you think the land is worth. It's worth 16. Okay, I'm sorry. If you owe anything on it, tell me if you owe anything on that 16, and we will come back to you. But I can help you with that. Absolutely.
Awesome. We've got Jesse. Hello. Our cabinets are in at our Canyon C in Gillespie County. That's awesome. Congrats.
Yep.
We have Jennifer, Jen and Tommy Gulch building in Bloom in Hill County, working with Brandy and Lacey in the Waco office.
Oh, awesome. Very cool.
We've got Andy building a custom rock wall in Grayson County, break ground in May. Can't wait. Awesome.
Beautiful, Andy. Yeah. Good to have you back, man.
Jesse likes squirrels. Yep. Yeah, I like squirrels. That's the problem. I will squirrel all day. And then we've got the Cunninghams getting paperwork ready in order to build in B County. Awesome.
Beautiful. All right.
Okay.
Well, then, in that case, guys, again, keep dropping your questions into the chat. Josue, let us know if you owe anything on the land. I'm working on yours now. And we're going to kick off this presentation. Again, we will answer all of the questions at the end. The presentation is not that long. Bear with us, but there is some important stuff you do need to know.
Absolutely.
So, Dawn, first of all, what in the world is a construction loan?
So a construction loan is what most builders are going to use when building a home on your land. And what that means is the builder is actually requiring their customer to pay the cost of the home during construction. So to do that, you would need to get a construction loan from the bank. So it's actually the customer, the home buyer, who is going to a bank to apply for a construction loan. What that is it's a short-term, higher interest loan, usually about 1% to 2% higher than whatever the conventional mortgage rate is. It is going to require hard equity in the project and is generally looking for around 20% down. And it's going to pay off if you owe money on your land. It's going to pay off that land loan and roll it into your construction loan amount. So whatever your land terms were, those are now gone. It's part of the construction loan. Everything falls under that. So traditionally, a construction loan is going to be somewhere between 12 to 18 months. That's what we mean by short term. But that has been increasing. A lot of them are extending to 18 to 24 months, just given the current market and the time it's taking to build a home. If you need to go beyond that, that's done with an extension and a renegotiation for that. And then what happens is as work occurs on the house, as your builder gets ready to do work, the lender is going to pay out the money in stages. And those are usually called, that's what we refer to as a draw. And so the loan is paid out in increments as the builder gets ready to do stuff. So like I mentioned, the first thing, if you owe any money on your land, they're going to pay off that land lien. They're also going to give the builder money to go ahead and get the foundation prepped. Once the foundation's prepped, they give the builder money for framing. And then what's going to happen is interest accrues on the loan amount that is paid out, and that amount increases over time. So like I was saying, initially, if you owe on your property, you're going to be paying on whatever that land amount was. When they get the down payment for the foundation, you're going to start paying interest based on that amount, and so on and so forth. So as that loan goes on, that's where the interest is accruing. Some of the loans are going to require you to pay that interest as you go. And others will say, you'll see language like no payments during construction. So what they're doing is rolling all of the interest into your final mortgage. So at the end, whatever interest has accrued just gets added to the price of your home. And then you get to pay more interest on it forever, for 30 years. Other costs that are associated with this loan are going to be, very similar to your mortgage. You're going to have origination fees, titles, closing costs. It's usually about 3% of the loan amount. And this is above and beyond whatever you're paying for your final mortgage. So even in circumstances, you'll see some people referring to a one-time close. That just means you're going to pay that twice. But you just pay it all at one time. But this cost is going to be associated with a construction loan. So all of that I explained to you, and I forgot to make it clear, this is what Tilson does not do. We don't do that, but you need to understand what a construction loan is to really understand the difference when you're working with us, because a lot of people don't understand that.
That's right.
So Eric, what does Tilson do?
Yeah, and again, there's nothing wrong with a construction. It's not illegal. It's not unethical. It's how 99% of custom homes are built, and commercial buildings as well. But it's not what Tilson does. So we took it upon ourselves, made a decision a long time ago. Again, to Don's point, how a large amount of equity down, 20% or more in a lot of cases, particularly as you get into rural areas, it has been historically very, very difficult to get a construction loan in rural areas. I got a friend of mine trying to get a loan in a particular county that he's been shot down by 2 different lending institutions just because of the county that it is, because it's so rural. They won't do it. And he does a lot of business with these banks from a business standpoint, and they will not fund because of how rural. So we made this decision years ago to say, you know what, there's a niche of the market here that we can help out, that we don't have to do a construction loan. Tilson, we were born in the Depression. We're Depression era babies. Our company is, and we are money savers. And so we have the money to build these homes. And so we don't require our customers to borrow money for the construction home. Tilson funds this construction at no additional cost to the customer. So all you have to do is just permanent takeout. It doesn't mean that we couldn't do one with a construction loan. We actually have recently done some with construction loans for people that was the only way that they could do it. Some 100% VA things, different off like that, where they did not have any kind of equity to speak of, and they didn't have money to put down. A construction loan, while it was significantly more interest to them, it was the only way they could get the home built. So we'll talk about that here after a while. But most buyers for us are able to build the home sooner because they don't have the expense of having to get the separate construction loan. So there's no construction loan or the associated fees. So like Don mentioned, there's 2 sets of closings. If you do even a one-time closed construction loan, it still has the dollar amount of 2 separate closings. There's no monthly payments during construction. So if you've got a house you have to sell, something like that, or you're paying rent somewhere after you sold your home, you're not doubling up on money coming out, because we'll discuss here in a minute, those interest payments that happen month to month, they start here. And the more money that's drawn, in other words, the further the home progresses, the higher that payment goes up, because you're paying interest on more money that has been borrowed. So the payments go up as construction progresses, no matter how long it takes. But there's no down payment for most of our buyers. We require only 10% equity. So that goes hand in hand with the lower equity requirements. And of course, you get to keep more money in your pocket, because we'll go through some math here in a minute. That is a significant amount of money more that a construction loan costs. Again, It's not an unheard of thing. It is very normal, but we can save you a tremendous amount of money. And then finally, kind of the intangible there is that, when a builder is requiring that you do a construction loan, that you go to some type of lending institution to borrow to build the home, they're basically telling you they do not have the financial wherewithal to build this home and get paid at the end.
Right.
They need you to go sign on the dotted line for money for them to be able to buy materials, to pay trades, to pay the framers, to buy lumber, to buy concrete, to buy sheetrock, to pay the roofers. They don't have the money to do that. And I'm not saying they're all going to go broke the next day, but there's something to think about there, that if they don't have money to pay them, anyway, just something to think about.
Well, and it also means you're on the hook for all of those things. If anything does happen to that builder, you are the one that borrowed the money from the bank. You are the one with the burden of paying it back, not the builder.
That's right. That's exactly right. So you have the security knowing that we have the piece of, we have I know a lot of customers on here that have been in construction a long time. When I say no one wants the home done worse than we do, this is why. We don't get paid a dime if it's a loan deal. We don't get paid any money apart from the $3,000 deposit till the house is completely finished. You've done your walkthrough, we've completed the punch-out list, and you go to the title company and close. Until that point, we're not paid. So believe me, we want to get paid, and we will get your home done. So, Dawn, walk us through how this might look comparing and contrasting.
Yes. Okay. So for this example, we want to keep it kind of simpler math. So our example family has a home price of $400,000, and they've got a land price of $75,000, and the total value of that home plus the land is $475,000. We're going to say for this example that they have paid $50,000 on their land, so they're still going to have a land loan of $25,000. Is what we're looking at. And it's important to note that total value for our example, we're assuming everything's even. We are actually in real life going to get a third party to do a to be built appraisal, and they will tell us what that total value is for it. So we're looking at the total value of the home plus the land that's going to be built. So under Tilson's EasyBuy program, really easy math. You got a total value of $475,000. You're going to need 10% equity, which is $47,500. And so we've got that because we've already paid $50,000 into the land. So we're good there. So check. And you're going to go ahead and give us that $3,000 deposit that Eric was talking about. That would be credited back to you at closing. And that's the last thing you're going to pay us on this home until we close. On the construction loan side, we're going to have the same value. So $475,000 for the home plus land. You're going to need 20% equity to get that construction loan, which is $95,000. So that means you're going to need to come up with $45,000 in cash. Potentially that's credited back at closing, or it could be worked out in a different way. But regardless of what we do at the end of the day, you're going to need to find $45,000 in cash before you can even begin the process. So the total loan amount that you would be getting for your construction loan is $380,000. You're going to have those fees, so 3%. So you're going to have $11,400 in fees, and that money is just gone forever. You are paying that for the privilege of having the construction loan. So your total cash that you're going to need to begin this process with a traditional construction loan is $56,400 plus whatever the builder deposit is, and that's going to vary by builder. Ours is $3,000. Some builders are higher. Some builders are about the same. It's just you need to ask your builder what that's going to be. So that is your total cash to start. So now we need to calculate interest because we've talked about on this construction loan. With Tilson, it's zero. So again, easy math. But on the construction loan side, we need to kind of figure out what to do. As I've mentioned in the past, and I'll say it every single time, this is the scariest comment that I've ever read about a loan product ever. But here's what the constructionloancenter.com has to say. During construction, a construction loan's payments are based on the loan amount actually drawn. It is therefore difficult, if not impossible, to accurately estimate what the payments will actually be, as the loan amount is subject to change at any one time. So
Just brings me
again,
all kinds of security,
yes, it makes me feel very warm and fuzzy. But like we've talked about, we don't know when the money is going to be drawn out. We don't know how long the project is going to take. So there's really no way to give you a 100%, this is how much this loan is going to cost you. So we're kind of guesstimating. This is what Construction Loan Center says you should do to guesstimate. So you take 70% of the loan amount, use a simple interest calculator to figure out what a monthly payment would be on that, and then multiply those results by 12 to get the total approximate interest. So again, this is an estimate. Could be more, could be less. It's just going to depend upon how everything goes out.
Also assumes it's done in 12 months.
Yes, also assumes that it's done in 12 months. So I am probably low in my estimates, but we want to be conservative.
Want to be fair.
Okay, so what that means is taking our total value, just to kind of review, we've already paid in, $56,400 plus our builder deposit. So we know that our loan amount is $266,000. Our loan amount was $380,000. If I take 70% of that, it's $266,000. We are going to say 9% interest because that's what we're seeing right now. So your interest over the life of this loan is going to be $23,940. And again, that's gone forever. That is the privilege of having the construction loan and the bank putting forth the money for your home to be built. So your total that's going to be paid that's gone in interest and fees is that $23,940 plus the $11,400 in fees that you paid up front. So that is $35,340 that construction loan has cost you. And we also have that additional $45,000 in cash tied up throughout this process.
Yeah. Real numbers.
Still doable.
Yeah. And so in some cases, again, these can be rolled into the loan. In some cases, they're not. They're paid monthly, and then that's also assuming they would fit in the appraisal, which is also the construction lender. I know. Don mentioned that we require an appraisal be done. Your construction lender is going to require an appraisal be done before you get going, and that way they know what you're going to have to come up with at closing to convert it to a permanent loan and make sure that you can afford that.
Mm-hmm. So side-by-side comparison with Tilson's EasyBuy, your total cash out of pocket for this family was their $3,000 deposit, which we are going to credit back at closing. For the construction loan route, the total paid in interest and fees was $23,940 in interest, $11,400 in fees, so a total of $35,340. Your other cash tied up was the $45,000 plus the builder deposit. So the total cash out of pocket, if you are making payments on that loan throughout construction, is $80,340 plus whatever your builder's deposit is. So you're looking at $80,000 versus $3,000 if you're using EasyBuy.
Or as we say these days, a pickup truck.
Yeah.
It's pretty much a whole truck. So yeah, that's a lot, folks. I know it's a lot of math to go through. So of course we have all kinds of ways to explain this. We got scenarios we can go through for if you want, but suffice it to say, there is significant savings if you will use Tilson's EasyBuy program just from a pure interest saving and fee, because a lot of that money is not, it's one thing to put $45,000 more down. That's great. You're financing that much less if you can afford to do that, if you're in a position to do that. But if not, you'll never, ever, ever get those fees and interest back.
Right.
I know that if you're comparing us to another builder, for sure ask about that rate. I know that one of the builders that was mentioned on here, they do a in-house financing.
Right.
This is not in-house financing. This is truly Fannie Mae, conventional, federally backed by the full faith of the U.S. government type of loans. The in-house financing, you're going to pay a significantly higher interest rate. You're probably closer to that 8, 9, in some cases 10% number. So definitely ask that question. I know that you were on here comparing us to another builder. Find out what interest rate they're charging and how long that's good for. I think it's something only like 8 months. You have to close in 8 months, no matter what. I would absolutely ask a lot of questions about what is this going to cost me in 8 months, in a year, and in 2 years. Because with ours, it's a truly regular old just if you were going into a subdivision and buying a home that's already existing, you would get approved for that full amount, let's say the number 400,000, like Don said, 425 in our case, we got 50,000 down. You would get a permanent mortgage commitment for that $425,000. We get that letter from your lender, and we it's a warm fuzzy for us. We take that. We don't close right then. We build from 0 to 100% completely finished out of that, and there's no interest accruing. There's no payments being made. No nothing, and your price is protected as well. So that's a very good. So as long as you don't go out and leverage a bunch of debt, or change jobs, or lose, or retire, or something like that, you'll be in good shape. So I do want to answer Josue's question. If you want to,
I see you did some math.
So I did do a little bit of math. So Josue came earlier, said he's got land that's worth $16,000. Of course, that'd be verified by an appraisal. Could be worth more. He's down in the Angleton area. Home he's looking at is $300,000. So our total value, the day that we would be done with the house, you can stick a for sale sign in it for $316,000. Again, for Tilson's EasyBuy program, we require 10% equity position. So that would be 10% of 316, which would be $31,600. Back out the $16,000 that he already has paid into the land, and he would need to come up with about $15,600 as either a down payment, or we also take that in the form of an equity deposit, so he can deposit that with us beforehand. Now, that being said, just because we don't push people to do construction loans doesn't mean we won't or haven't had customers that do construction loans. In a case like this, there are programs out there for a possible FHA one-time close construction loan. We've done it with VA before. It's been a while to do it with FHA, but the deals are out there. So the same $300,000 home, I just rounded about $27,000 worth of construction based on what Don had thrown up there. A little bit smaller loan amount, but about $27,000 or so in fees and interest. And again, it's a little bit of a nebulous number, but you would put that money into the loan. Go and calculate that interest ahead of time. That'd be a $320,000. So you're doing a $327,000 loan. It's a $300,000 loan. So you're financing those fees and interest and everything like that. But if you don't have the equity, that's how you do it. FHA requires 3.5% down payment. So they'll do a 96% loan to value, 96.5% loan to value. 3.5% is only $11,375. Got $16,000 into the deal. So you would not have to have a down payment of any kind, which is the happy face. This is a dollar sign happy face dollar.
Happy dollars.
But again, this is real. Okay. So it's you're not paying anything now, but you are paying interest on that $27,000 of fees and interest for the life of your loan.
Right.
So money costs money is kind of what that boils down to. So again, Tilson's EasyBuy, you would put down $15,600 and you're only financing the $300. Potential one-time close FHA construction loan, you could finance $27,000, $30,000. We'd get a close number on that, but you wouldn't have to come up with additional money up front. So this would be one of those situations which are like, thank you, Josue, for letting me go through this exercise, because it is an option for some people. But again, if you've got 10% equity, there's no reason to go this route.
Right. All right. And let's see, we've got Diana, who's building a San Gabriel C outside Moody in Coryell County. Pad base is in and forms are going up. Awesome.
Oh, very cool.
We've got Katie, happy Tuesday, from the Nash family, building the Breckenridge in Colorado County, doing interior paint this week. Oh, wow, you're far along.
There's a lot of interior paint in Breckenridge. There's a lot.
Yes, there is. Gina is saying, worried that initial appraisal will be difficult because there are not many comparisons nearby.
Oh, that is a great point to bring up, Gina. Okay, so that's why your location does matter as far as, so you got urban, suburban, well, there's one above that, like dense something. Anyway, there's rural. Okay. Most of ours, of course, are rural. So what that means is they can go further out. So if you're in a rural area, they can go further out for those comps, those comparable sales. They can go 15, 20 miles out in some cases. And you might be surprised what happens in the woods 15, 20 miles away from you. You may not be very impressed with what happens. So that is something to consider, though, is because there are comps. But again, this is why we require before we start construction, so that you know exactly where you stand from a financial standpoint before we ever drive a nail. And I know some people that's like, well, why do we have to get all that? Why do we have to get appraisal now? Why do we have to do all that? Well, this is exactly why, because otherwise what happens is you got a lot of lenders out there that say, oh no, we do the appraisal at the end when the house is done. Okay, well, can you imagine being, 30 miles away from Mahia, Texas, an unincorporated Limestone County? All of a sudden you get the week before closing, you get an appraisal done, only to find out that it's $80,000 more than anything in the area. And now you have to come up with that money on a completely finished house.
Right.
Worst case scenario, we find that out up front before we ever start construction. And you can change houses, delete things out of the house. There's all kinds of options you can do, or know how much money you need to come up with between then and closing. You've got some runway to make a decision, as opposed to you're in a crunch now. So, and oh, by the way, if it's that far long, you're paying the highest interest payments you're going to be paying. So that's the thing.
The construction loan.
Mm-hmm.
Yeah.
So don't worry.
That's why we do it. That's why we do it.
What it will be.
Yeah. We've got Andy saying, I experienced this firsthand. I was going a traditional route, and when I finally fully understand the loan origination fees, construction fees, builder deposit, etc., I left and found Tilson.
There you go, Andy. Thanks for sharing that, man. Yeah, I'd love to know of course, it's up to you if you want to share it or not. But what's yours? How close are our examples? Where did you end up when you were shopping on those origination fees, construction fees, builder deposit? What was the number? Because we think we're pretty accurate because we've seen a lot of customers like you that came over to us once they did their homework and started to say, what am I paying for again? And they share those numbers with us. That's where we get this. But great point. And thanks for pointing that out, Andy.
All right. We got Tish asking, does your program allow for conventional USDA financing?
Okay, so it does allow for conventional. All right, so those are two different things. Conventional is different from USDA. So in loan world, you have conventional financing, which is your Fannie Mae, Freddie Mac. It's how most loans in America, most mortgage in America are done. They have a set of guidelines, credit score, debt to income ratios, all that kind of stuff is there. Retirement accounts, W-2s, all that. Just most of what America is going to fit in that conventional box. Then you've got FHA. That's a different one. That's the Federal Housing Administration. That's a different box. Still, still does those kind of programs. You have VA, which is a different box. In Texas, we have the Texas Veterans Land Board, TexVet. You can get a TexVet loan. That's a different box. Ours does all of those. USDA starts to get a little sticky because the amount varies from county to county, and there are income limits. So you can't make over a certain amount of money to qualify for a USDA loan. And so most of our customers, they're overqualified. They have too much income to qualify for a USDA loan. So we end up finding out. What we are able to do in most cases, though, is flip them from the USDA type financing over to either FHA or conventional and get them basically the same kind of deal. USDA is very, very limited in what they can do from a flexibility standpoint.
Okay.
Because of how it's designed. There's nothing wrong with it. It's just
It's
designed for a totally different type of development.
Yeah. We have Sonia asking credit score.
620 is going to be the minimum. 680 is better, but 620 is going to be the minimum. I have seen one or two come across in like the 580 range, but those are a very, very, very limited set of programs, and the rates are higher for sure. I mean, it's because it's a measure of risk, right? So a credit score is simply a history of how someone pays back their bills, and it could be for various different reasons, Sonia. So don't take this the wrong way. There's medical events that happen. I don't have $400,000 to pay for this surgery that had to happen, and I'm in default. It's going to ding your credit. Like whatever, at least you have, or your less their health. Deal with it. That's okay. We'll figure that out. But in most situations, that's not the case. In most situations, it is truly someone has over leveraged, they've over borrowed ahead of more than what they can afford to repay in a timely manner, and that's the whole point of the FICO, the Fair Isaac Credit organization, of measuring people's propensity to pay back or not. And so if someone is strictly a numbers game, if someone is a lower credit score, statistically speaking, not personally speaking, statistically speaking, they're a higher risk. There's a higher likelihood that they will default on paying back. Therefore, the bank charges a higher interest rate to offset that risk. So that's how that works. It's the same thing with, investing in stocks. An unproven company that doesn't have a long track record, or maybe even has a poor track record of repaying, their bonds will be selling at a higher rate, or their stock is going to have to require a lower price because it's higher risk. Whereas you take like an Exxon or somebody like that, who's Walmart, Exxon, Conoco, that have performed forever. They've met their dividend every quarter for 50 years. Their bond prices are going to be their bond yields are going to be much lower. They're very low risk.
Yeah.
Statistically speaking.
All right. Makes sense. We got Garrett saying, great team. Definitely recommend Tilson over construction loan. Building a modified Wimberley in Bell Oak, Boulevarde, Comal County. Things are moving really fast. Thanks to Zach. Awesome. Thank you.
All right. We'll give Zach a shout out. Thank you, Garrett. I appreciate you sharing that, man. Yeah. Thank you very much.
And then Gina, who was worried about her appraisal, this is the reason she's worried. She is rural with 27 acres more land than houses around us.
Yes. And by the way, that's what we all want. Okay. That's what we're after.
That's the goal.
And so, Gina, in a couple of situations, a survey out might be an option for you. I don't know how much you owe on the land, or if it's all paid off or whatever, but there are some occasions where they go find, hey, look, there are comps out here, but all the comps are 4 to 6 or 7 acres. We don't have any comps that are 27 acres. So they may say, can we survey out 5 acres so that now we're comparing where their house is going to be, obviously, but cut out 5 acres. It's imaginary dotted line. Okay. You don't have to build a fence there or anything like that. It's just an imaginary 5 acres around where you are. And I'm using that as a hypothetical. It may be 7, it may be 27. I don't know. But to be able to say, okay, this will bring it more in line with the comparable sales that we can find in this area. So you may have to go spend the money on a survey out. And we've done that. So instead of comparing, 6 and 8 acre tracts with houses on to a 27 acre tract, which is, it's not comparable. That doesn't compare. You may have to bring yours more in line with the comps, with the comparable sales. I hope that makes sense. So you still own it. The other 21 acres is still yours. But you'd be an option depending on how the comps come back.
Okay, makes sense. We've got Andy building a Travis A in Fort Bend County, slab pour last week. Everything looked and went just like you've been showing. Could not have done it without a construction drive. Concrete trucks are heavy. Yes, they are.
Preach it, Andy. Somebody give Andy Hill a Tootsie Pop. He wins. But yes, it's construction drives, no joke. A Toyota Tacoma, no problem. Getting across grass, no big deal. 80,000 pound concrete truck, very different story.
Not so much.
Not so much. Yeah. Not so much.
And then Garrett is saying his neighbors are pretty jealous of our speed and efficiency. So that is wonderful to hear. Glad that your build is going well.
Something very good about jealous neighbors. It's a good place to be. And folks, of course, ask other questions too. We can absolutely answer questions. We would love to answer your questions about financing. We're fully prepared to do that today. But any questions you have about financing, about construction drives, like Andy was mentioning earlier, about permitting, about site preparation, about design in general, changes, construction, we're here to answer every single one of those questions so that you guys are fully armed and prepared. But again, that's the whole point of this show, is to help you guys out with all of those kinds of things.
Yeah, absolutely. I know we had a couple people at the beginning who said they're looking at us and other builders. So what other questions can we answer for you guys about Tilson?
Yeah. See, Alex is jumping in.
Yeah, we got Alex. He is saying hello from Dayton.
Welcome, Alex.
We've got Gina. Shout out to Talon for all his guidance. Awesome. And then Tish is saying, can you build a home with a wood burning fireplace? We
can, Tish. We absolutely can. So a couple of different ways to do it if you're in, depending on where your climate zone is. And of course, this is, what are we today? February 28th, 23. Things change as the changes, so we have to change with it. But for right now, if you're using bat and blown insulation of some sort, it's fairly simple to do a wood burning fireplace. None of them are inexpensive. They're all expensive now because we do have to still meet an energy code, 5 air changes per hour or less in a climate zone 2 type place. So while we can put a 42-inch wood burning fireplace in a home like that, I will tell you from personal experience, keeping a big fire going these days with as tight as we build the homes, it's a struggle because wood burning fires need air. They need fresh air. So there's different ways to accomplish that. We could try and bring a fresh air intake in. We've tried that. We've done blowers on them, all that kind of stuff, and still it's still a struggle, but we can be done. When you go to spray foam, which we actually do recommend as a more energy efficient option, purely from a tightness standpoint in Texas, right? You are much more likely of the 12 months out of the year to be running your air conditioner than you are to be burning wood in a wood burning fireplace where we build. That's just facts. So on a spray foam, you can still do a wood burning fireplace. However, it has to have its own combustible air chamber. So we have this product called the Constitution, and it's not a paper, it's a fireplace, and it has sealed doors on it where truly it gets all of its own combustible air in there. We can seal these doors off, and it can pass because otherwise it will not pass the air changes per hour test in climate zone 3. It cannot be done. Fireplaces leak. Wood burning fireplaces leak too much air. Gas fireplace is a different story. They're sealed. They have glass doors on them. They have seals. But this particular wood burning fireplace that we offer, called a Constitution, it can be sealed off, and so you can still do it anywhere in the state. It just costs different amounts of money depending on where you are to be able to accomplish that. And then you have to decide how important a wood burning fireplace is to you inside. You can also do a wood burning fireplace outside. You can do it on your porch. We sell a stainless steel wood burning fireplace that you can put outside. Doesn't have to be any kind of air changes. It's outside the conditioned airspace. Also, you can build a fire pit anywhere you want to on your land.
Yep. Awesome. All right. Sonia's asking, does Tilson have to complete the entire house, or can we leave out things such as flooring to lower the cost? She says she's also planning to do her own septic, and her goal is to pay off this house before I'm too old.
All right. That's a good goal. Nothing wrong with wanting to pay the house
Great
off.
Goal.
So the answer to your question is we do allow customers on some occasions to do things like flooring. It's rare that they end up opting to do that. They find out basically what they're going to end up paying for it and doing it. I don't know that it saves you that much money. I do know that there's another builder out there that's how that. We'll leave out the paint, the floors, and the appliances, and you can finish out, and you'll save all this money. But it's not where all the money is on the house. Right.
But what that does do is make you not traditional financeable. And so you're then beholden to that builder's financing until all of those things are finished.
That's why you have to do the in-house financing with them, because a lender will not loan on an unfinished home, a permanent loan.
Right.
And then you're on a shot clock to get it finished so that you can hopefully refinance it. So if your goal is to pay the house off before you're too old, do not go with a company that does in-house financing. Go with one that will do, whether it's us or someone else, go with someone who will do a conventional type of loan that has a lower interest rate. You have a higher likelihood of paying it off faster. That being said, the simple answer to the question is yes, you can do your own floors if you want to, but I don't want to get a false sense of it's going to be tens of thousands of dollars less, because it's not. We're going to pay out our standard flooring contract, which is carpet and tile traditionally. And so it just doesn't add up to a lot of money in the big scheme of things. It's still a couple $1,000, but it's not. You're not going to knock $25,000 off the price of the house by not doing floors.
Right. All right, makes sense.
And you're going to spend way more in interest than you're going to save in floors. That I can promise you.
Absolutely. All right, Eric, is there anything else we're leaving out?
Well, I want to give a quick update on like Waco, let's say. So the models are way far along there. I know our team there is pretty excited. We're hoping to have them wrapped up in the next 9 to 60 days. So stay tuned for what's coming online there. We're very excited to having the Tampico, the Angelina, and the Casita all done and ready for you guys to view in the next couple months. Also, the Palo Duro model in San Marcos is well underway. Framing is blazing through right now. So that's going well. If we can keep the thieves away from it, that's been another issue. Right there by the freeway. Yeah, we got hit a couple times.
It's a little visible.
Yep. So we're in the process of hardening our target, shall we say, making us less appealing to the passersby for looking for free lumber. So smile if you go by the San Marcos office. You're probably on camera at this point. But yeah, so and it's guys, that's part of what we deal with. The good news with Tilson is we do carry builder's risk insurance. So if something gets stolen off your job site, $10,000 worth of lumber or hardy or windows, that's covered by us. We're not other builders require that you get the builder's risk insurance if you get any at all. So you would if it walked off overnight for that, but with us it's not. But all that to say, the Palo Duro model is well underway. It is toured, of course, by appointment, case by case, because of a safety issue, working overhead. We may ask you to have to wear a hard hat, something like that when you go through it, but we encourage you to go make time to visit that model while it's under construction to show you how we do our framing. It will be spray foam. That home will be. So be a good way to see how that's done. We're pretty excited about that. Might be able to do some video footage if we time it right. Maybe.
Yeah.
So I know a guy. Yep. But anyway, that's the big goings on as far as production around the state. Timeframes are coming down. Pretty excited about that. We're now quoting people on an average of about 14 months total from when you sign a contract to when the house is completely finished. We actually have some that are coming in less than that. Some coming in still a little more, but 14 months is what we're comfortable quoting as an average right now. So that's the good news, right? About these rates. The rates today aren't really that important. If you're a Tilson customer doing the EasyBuy program, today's rates don't mean anything because you're not closing today. You're not closing until the house is finished. And everything that we're reading, of course, we don't have a crystal ball. I'm not a financial advisor, but I do read a lot of economic stuff about, particularly around mortgages in the housing industry, because I happen to be affected by that. So they're looking at maybe another rate hike in March, maybe another one in May, and then no one's seeing anything past that. And even then, they're talking about that's when things peak, because in life, things ebb and flow. They peak and they valley. For every action, there's an equal and opposite reaction kind of thing. I think it's a theory of relativity, if I remember that right. So, when rates were at 2.9, 2.8%, and you let that rubber band go, there's only one place they could go. And that's kind of where they are now. 6.3, 6.5, 7. They'll do that. And just like a roller coaster, they will come down. So the great news is you would not be closing at today's rates. You'd be closing at whatever the rates are going to be in about 12 to 14 months. So something to consider. If you truly are wanting to time, if people's excuses, I'm waiting for rates to come down, fantastic. I recommend you go under contract now so that you can take advantage of those rates when they go down. And even if you're closing today or tomorrow, great news. If they go down in a year, guess what? Refinancing is always an option. Always an option.
Yep.
I think.
Yeah. What I've heard a lot of other people say is that you're marrying the price, you're dating the rate, because you can always refinance when the rate goes down. So
for sure. So we will make a last call for questions. Again, any kind of questions and comments you want to drop into the chat, financing, construction, time frames, site preparation. We are here to answer all of those questions. I kind of shy away from color selections, but that's just me. But anyway.
That's very, very personal, but we do have some tools to kind of help you decide what you like.
We do.
So we can point you in that direction. Let's see. We have a friend from YouTube who's saying, I missed the beginning of this presentation. I just chimed in now. Can you tell me how Tilson allows you to avoid the construction loan question trying to build a house in Albuquerque, New Mexico?
Yep. My one-word answer is liquidity. So your builder would need to have cash, need to have the capital to build the home out of their own pocket and not get paid till the house is finished, which is, that's not outside the realm of possibility. I don't know of anyone in New Mexico doing that. I know of a couple of builders in Albuquerque, but I don't know any strictly on your land builders in Albuquerque. Abrazo Homes might be one to check with that. They might have the financial wherewithal to do something like that. I don't know if they are doing it, but I think they have the financial wherewithal to do it. And I've met their owner, and I think he's a really solid dude. So I wouldn't hesitate to reach out to them. But basically, your builder would have to have the cash on hand or access to it in some way where they could build the home from zero to completely finished, and then they could get paid, and they could pay their trades and pay their vendors and all that kind of good stuff. And you'd want affidavits stating that everybody's been paid, and we provide that as well. I forgot to mention that, but at the end of construction, we provide you with affidavit of all bills paid, so that then you would close on your permanent loan. All the title is cleared on the up and up. So
yeah,
ask them about their liquidity.
Yep, 100%.
All right. Well, Dawn, if we don't have any other questions, there's no reason to keep these good people away from their hardworking jobs. So, guys, we genuinely hope. First of all, we appreciate Dawn setting this all up. It's a lot of math. Thank you for doing it.
Absolutely.
Thank you, team behind the scenes, for managing the chat for us. Appreciate it. Thank each and every one of you for tuning in and watching these things. Obviously, if you missed coming in right away, no problem. They're housed on our YouTube channel. They're housed on our Facebook page, and they're housed on our website. Is that right?
Mm-hmm. Okay. And yes, and we do answer questions after the fact. So if you are watching this in delay and you want to leave us a question, we will come back and answer that question for you.
That's right. We do do that. So yeah, if you didn't catch the whole thing, no problem. It's housed forever and ever, and because it's on the internet, so it's kind of like deleting something out of email.
Never and if you actually have personalized questions about your specific situation, every single one of our design centers has a calculator that they can run for you on what your savings would be given your circumstances. So that's right. It's a good idea to reach out to them as well.
Yeah, we have very financially savvy folks. So because we know that's a gap that must be bridged to build a home on your lands. Anyway, we hope you guys get a lot out of these things. They are for you. We want you to be well educated and have understanding everything that's going on, and be as transparent as possible about what we do and how we can help make your lives better. And most importantly, we really soon hope to make you part of the Tilson family. We'll see all y'all next time.
Bye, everybody.